So most traders do. So most traders struggle with liquidity concept because they don't understand market structure. So because of that, in this lesson, I'll be teaching us how to properly identify market structures on chart. So you don't keep getting confused about the market direction. Okay. So let's get into it, guys. All right, guys, welcome to market structure. So today I'll be showing us we'll be talking about market structure, and I'll be doing some chart examples. For now, I'll be using the drawing, a plain drawing first. Then, as we move forward, we're going to do some chart examples. But let's start with the basic market structure. First, in a market structure the market moves in three different directions. It's either the market is going up, okay? Is that the market is going up or is consolidating? That is ranging sideways or consolidation, going sideways, or the market is going down. Okay, when the market is going up, we call it bullish market structure. Okay, once the market is going down, we call it a downtrend or bearish market structure. This one is uptrend or bullish market structure, and this one is sideways or ranging or consolidation, meaning the market is not, it does not have any particular directions. So now, how does market structure looks like? Look at this. In the market, okay, if the market is going up in a bullish trend, the market just does not just go in a straight line like this. Sorry. Okay, so the market does not just go in a straight line like this. Okay, the market moves exactly like this structure we've seen here. Okay, not in a straight line, because if the market moves in a straight line, then it will be untradable. Okay, the market will be untradable then. So now let me get this off. Sorry. Okay, so now if the market, now this is the low of the market, okay, let's say this is the low of the market and this is the high. So when market move up first, goes up first, it pulls back a little, it comes back down. Even if it is in an uptrend, you understand, like I said, it will not just go straight up, it will go up for a little while, probably lose strength or lose fuel, and then it will come back down. Okay, come back down, pull for a while, come back down for a while, and then go back up again. Okay, continue its uptrend, comes down for a while, and then go back up again to continue its uptrend. Okay, so now why does the market do this? It's just, let's take for example a car. You understand, when you have a car, you're driving, the car can drive for a very long time, but it will have to stop for a while to get fuel. You understand, to fuel it to continue its journey. Even for someone, we humans, we cannot keep working continuously without rest or without eating or drinking water before we continue whatever we're doing. Same thing applies to the market. Okay, the market will not just go in a straight line like this. Okay, good. Now, so now we call this a structure. Okay, how do we identify a structure? Now look at this. When the market goes up, it's just in a straight line. Okay, sorry, I'm not really good with making straight lines. Okay, once the market goes up, it's just in a straight line like this. Okay, it goes in a straight line like this. Okay, so when the market stops and then decide to pull back like this, from here, from this low to this high is a structure. Do you get now? So now from here to here is also a structure. It is no longer a straight line like this now. It has gone like this, from like this to like this. So from this place to this place is a structure, and from here to here is a structure. So now, when the price, after the price finish pulling back, then it comes back and then break the last structure. Remember we said from here to here is a structure, and then it broke this last structure. So that is why you see this BOS here. This BOS means break of structure. Let me clean all this so that we can see. Okay, break of structure. So meaning that this is the last low. This was the last low. This was the initial last low. This was the last low before. Then this was the last high before the pullback. Then when the pullback happened, the price continued to go up. Okay, and broke this high. So it broke structure. So since this high is broken, now this low is no longer the recent low. This is now the recent low. Okay, and now as this high went like this before the pullback, we don't know where this high is going to pull back to and when this high is going to pull back. So it is not yet a structure until it creates a pullback like this. Okay, let me make it clearer for you. Come here, I'm trying to clean all this. Okay, now from here, price broke structure. Forget about this one I drew here. Price is still here. It has already broken this high. Okay, and it is still here, meaning it has not pulled back yet. So right now, as price is here, we cannot say, okay, this is a structure yet. No, it is not a structure yet because it has not pulled back. Though from here to here is a structure, but we can only mark this as a recent low. We can't mark this as a recent high. Why? Because it has not given us a reasonable pullback yet, okay, to call this a recent high. But it is clear that it is going to create a new high because it already broke the last high. Okay, good. So now let me finish cleaning up all this. Okay, so now since price came here, okay, this was the last low, this was the last high. Now it pulled back and then broke this high. So meaning that this is now the recent low and this is now the recent high after this pullback. Then this one did the same thing, came down and broke this high, meaning this is now the recent high, this is now the recent low. So now, how do we call it? What is the language we call it in market structure? This is the low, this is the high. This low is now the higher high because it is in a bullish trend. Okay, so this will become the higher low and then this will become the higher high. Okay, this one is low, this one is high. Why do we call this higher low? Because it is higher than this low. This low is higher than this low. Okay, and this low is higher than this low. That's why we call this higher low, and that's why we call this higher high, because this high is higher than this high. Okay, and then this one in the middle, this is a BOS, we call it break of structure. So this low broke this high. Okay, meaning it broke structure. Okay, this one did the same thing, broke structure. This one did the same thing, broke structure. Pull back, it did the same thing and break structure. Okay, that is how a bullish market structure, that is how it's, continue its trend, its upward trend. Now we're going to look at the bearish market structure now. Okay, the same thing, it's just vice versa. This is the high, this is the low. Okay, so market created a lower high. Why do we call this a lower high? Because this high is lower than this high. Okay, and then it broke structure, it broke this low, so it broke structure. So this is no longer the recent low, this is no longer the recent high, because a new high has been created. In order for this high to be valid, it has to break structure, and it just did break structure. It broke a new low, so meaning that this high is now the new high and it is now valid. So now the same thing applies here, and it broke structure. But if eventually price does like this, okay, it didn't break, so you can see that I didn't take this. Okay, let's use this as an example. Let's just break structure. Okay, good. You can see that as price does like this now, it didn't break structure, it didn't break this, it didn't take this low yet. Okay, you cannot call this the lower high because it has not broken structure. This lower high will only be valid if it has broken the recent low, which is this low. Okay, so now since it already broke the recent low, then this lower high is now valid. But if it just does like this, come in. So if price just does like this without breaking this low, this high this lower high is not valid yet, because price could easily just do like this. Okay, take the high one more time before breaking structure. Do you understand now? Let me make it easy for you. Okay, let's say this is the structure. Okay, price created a lower high. Sorry, I had to do something. Okay, as I was saying, if price was just like this, the first one broke structure, right? Then this next high just did like this, did not break structure, did not break this last low. Then this one is not considered a lower high yet. Why? Because it has not broken this last low. Because price could easily just come like this and then do like this and then break structure. So this will not be considered a valid lower high. This will be the valid lower high because it is this high that broke structure. Okay, we are going to learn that in the next lesson anyways, but don't let me confuse you. But we understand that for a lower high or a higher high, higher low to be valid, for a structure to be valid, it has to break structure. Okay, it has to break the recent low, and the same thing applies to bullish too. For a higher low to be valid, it has to break the recent high, and for a lower low to be valid, it has to break the recent low. Okay, good. So now we're going to continue. So the same thing. So price keeps going high, break structure, high, lower, low, creating lower highs, lower lows, lower high, lower lows. Okay, that is it for a bearish structure or a downtrend market. Now for consolidation, price will just keep going sideways, up, down, up, down, up, without a particular direction. You can see you cannot determine that whether this is a upward trend or a downward trend. Is just moving sideways, so we call it ranging sideways or consolidation. During this kind of market condition, we don't trade. Okay, at least the strategy I'm going to teach you in this course, we don't trade this kind of condition. It is not good for this kind of condition. Though for those that trade support and resistance, yes, they can survive in this kind of market. How? Because if we look at it this way, this is the resistance, okay, and this is the support. So maybe from here, once price touch this line, they put for a sell order. Price gets here, they take profit. Once price touch this line again, they put for a buy order. Price gets here, they take profit, sell order, you know, like that. Though it is risky, but then let's just forget about that since we will not be talking about support and resistance. So this will be all for bullish and bearish market structure. So particularly, this is not how it's going to be on chart. Okay, it's not going to be like this on chart. It's not going to be like this on chart. I'm going to show you how it's going to be like in the next lesson. Okay, and in the next lesson we'll be discussing about internal and external structure of the market. So just go on your chart and make sure you practice this accordingly. Practice. You just watching it doesn't mean you've known it. You've known it. You have to practice it. Okay, you have to practice it properly without you having issues or without you having doubt. Then you can know that, okay, yes, you've gotten this right, because getting this right is very, very important. If you don't get this right, there'll be problem. No, there's going to be problem, because this is the foundation of what I'm going to teach you to become a profitable trader in the long run. So, to the next class.